All right, good morning, guys. So, weekly update, midweek update, whatever you want to call it. Okay, gold has been a little bit tricky. Okay, obviously we had this big blow off, breaking Monday's highs. Okay, so what I've done is, as usual, I've marked now because obviously what happens is when we're moving up like this, we don't get daily supports and daily resistances to trade, right? So it becomes a little bit choppy, and I'll show you what I mean by choppy on the 1 hour in a minute. But on the daily, we've got quite clean price action. Okay, so we've got support formed. You can see the liquidity grab into this daily fair value gap here. Okay, and then we've got a high wick, high wick, high wick, and currently we have a high wick. Now it's CPI day to day. So I marked out and identified this area yesterday, which held. However, on the basis of how I like to enter, this candle is so damn big that it was not giving me an option to enter, because that candle there now is currently 160 pips. If we drop down to the 30-minute time frame, when we move this down here, we've still got an 87 pip stop loss if we want to enter based on a 30-minute or 15-minute bitch candle, rejection of the area, and by the time it gets up to this daily level, we've kind of run out of risk reward. Okay, so it wasn't for me yesterday. You can see the chop. Okay, if we look just on gold, you can see the chop. There's a lot of chop last week heading into NFP, which is to be expected, with this big blow off Sunday night, Monday morning, and then chop all the way through the New York session. Another blow off top yesterday, and we're on the 30-minute right now, but even on the 1 hour, okay, it doesn't look as though there's much interest from the New York session. Obviously, if we come down here, New York opened, push back up towards the 2900 level, and now we're just kind of retracing, right? So gold is bullish. Okay, so I don't particularly want to be looking for any shorts. It doesn't work well in my mind. Okay, so we got to wait, and for me, in order to get this direction, I've got a couple of ideas marked off at the bottom here. So obviously we've got our daily resistance now should form support. We can also come down as low as this wick, this low here, but for me, it's the top of the candles here, which is what I always mark. Now, what you'll see sometimes is when these areas form, okay, we come down, we tap into them, and we move back up. So we've got CPI today. It wouldn't surprise me if we come down to this level, tap and go. Now, whether or not that's within the right timing for us to be able to get into a trade or not, I don't know. But at the minute, it certainly looks like this area here is holding. Now, if you put the fib from the weekly high to the weekly low, which is this wick here, we're currently hovering around about the 50-60% retracement mark of the move up on Monday. Now, that doesn't surprise me whatsoever, because heading on into news, I've noticed that that's generally what gold will do, and some other indices as well. They'll sit around about the midway point. That way they can come down, spike, take the lows and move up, or they can spike up, take the highs and move down. That's generally what I see. But what I've got identified here is we've got this fair value gap here. We've also got this fair value gap here, which is just above the weekly open. So what I'd prefer is to use maybe this area as our buy zone. Okay, so anywhere around here, you can leave it however you want. There's a very small chance that this fair value gap would hold, but for now, I'm not massively. I don't want to trade into this support. If you look at the way price is rejected, and we've broken through it, we've retested, and it looks like we might retest it again. I don't want to trade short through this. Obviously, I don't particularly want to trade away from it either, because I think there is a little bit of a mixed bag. CPI news, I believe, is positive, or forecast for positive. We were 170 pips away from this imbalance down here. There's no reason why you couldn't take a short trade back up to the daily level from here, 180 pips. For me, this current price action on the 1 hour is bearish, so I'm going to sit on my hands more than likely today, because this price action does not scream out to me take a trade. It screams out to me stay out. All right. Now, if we look at the DAX, okay, so DAX has been moving very well. Okay, actually, I should have probably been more focused on DAX than Nasdaq this week, maybe, because it has been a lot cleaner. Now you can see the price structure on the daily, same method as I'm using for gold. We've got a couple of levels here, right? Now, the first level here, okay, which would be the daily. If this daily gets tapped into, that means that we're actually breaking yesterday's low, okay? Because you can see that obviously once the daily support has been formed here, okay, once we've broken back above it, it's been used as support, it's tapped and it's bounced, and I gotta be honest, I should have been in this trade here, okay? But obviously with all-time highs being here, yesterday, it confuses you a little bit. So maybe I won't use the all-time highs, and I'll just focus more on price action and structure, because this was a nice trade here, potentially. Now, you see that I've marked off this this fair value gap here, right? Why haven't I gone to maybe this 1 hour level? Okay, so we've got this 1 hour level here. Okay, so we could actually use that as an addition. Okay, but the reason why I've marked this area here is because it lines up with the 2200 key level, right? So once we've now broken through it, there's no reason why that this key level here, 2200, won't act as support. Quick look at the Nasdaq, and Nasdaq, again, I think is waiting for CPI. Okay, we've got daily levels here. We've got quite a big, what looks like a daily accumulation here. So it's going to break out one way or the other. These are rejection wicks. Okay, there's no two ways about it. These are rejection wicks. Nasdaq, as a rule, is bullish overall long term. These are rejection wicks, obviously coming off these daily levels from the beginning of January. News fueled more than likely, but we are inside this area here, okay? And my idea to get into this, or to get into a nice trade, you know, would be down at this daily level here. I'm not massively blown away from shorting from this daily level, because you can see that it's spiked above it, spiked above it, spiked above it. Potentially could spike above at any point and stay here, because then obviously we've got these other daily levels that we can move up to from here. So I would prefer, what happened yesterday, I was in the long trade here somewhere, and it just kept moving up to 1 hour. Eventually I moved my stop loss to break even. I let it tap in once more when New York opened, but as soon as it pulled back up, I thought, right, it's either going to go now or it's not. So I took another break even on that trade, and then I walked away, done some shopping, because it's just getting on my nerves. So we've got this area down here. Okay, so we've got a 1 hour imbalance that needs filling. I filtered all the way down to the 15-minute, because obviously this imbalance is quite big, right? I would like to see this daily level either just maybe tapped in or rejected. I know that's a long way down, and you could say, well, why not trade it down then? Today is CPI day, so I don't particularly want to be in a trade and then wish I was not in the trade. So yeah, Nasdaq, maybe we'll get this move down today, take out the lows before maybe a move up, or maybe we'll just stay in this range. We've got DAX for me potentially. Looks like a tasty setup. I would definitely be looking at some form of trade here around about the 50%, 61.8% mark, which will potentially line up with these levels here in the 2200 key level. And then gold, well, we've got a plan on gold. I think wait for CPI, because I do think we will come down here and just, I can see it tapping off this daily, maybe within a couple of pips, and then moving up again. So this price action is just nasty. Looks like we're rejecting this fair value gap here. Potentially there's a trade to the upside if anyone's looking for anything, because if you follow this candlestick anatomy, by the time we break above here, you're still looking at a 57 pip stop loss in order to get into this trade. You could potentially have 2-hour trade. Yeah, we've got 2-hour trade here. Personally, I'm just going to sit out of it because I think it's just too choppy. And yeah, I think it's with CPI in the next couple of hours, I would say that it's a lot safer just to sit on your hands and wait for that news, and then we can attack the market Thursday, Friday if we don't get anything this afternoon. All right, guys, if you need any help, hit me up in the chat room.